Hello everyone. This is Group 8. My name is Chen Yiming. My metric number is A1975597. In this part of our presentation, I will talk about one important reason for Toshiba's internal audit failure, the configuration between conclusion service and assurance or audit service. First, let me explain the difference. Consultation service means giving advice to managers. Adults help the business improve operation, manage risks, or reduce costs. The service is helpful, but it mainly supports management. Assurance or adult service are more serious. They check if the company follows rules, has strong internal controls, and gives correct final information. These services protect shareholders and help the adult community and regulators. At Toshiba, the internal adult team focused too much on conclusion. They worked closely with managers, but did not check if the accounting methods were correct. This is dangerous. As we can see in the table, the purpose of consultation is to give advice. The purpose of assurance is to check if everything is right and legal. The audience for consultation is management. The audience for assurance is the adult community and the regular. The risks is that consultation can be friendly with the managers, but if assurance is weak, may not be found. In Toshiba's case, the adults act like consultants and did not do proper accounting checks, so the company was able to report for purpose for years. The main lesson here is clear. Internal adults should focus on assurance first. Giving advice is good, but it should not replace checking for errors. If Toshiba had done this, the accounting might not have happened, or at least would have been found earlier. Okay, thank you.
So I will discuss the difficult goals set by Toshiba. First of all, let's talk a look at where Toshiba's problems. The top management of Toshiba has set overly aggressive financial targets, which are almost impossible to achieve under normal business conditions. To achieve those unrealistic post uh, employees are under greater pressure and eventually have to complete the task through improvements such as manipulating properties. What's the most serious is that 14% to 45% of compensation of senior executive is linked to those costs, further motivating uh, unethical behaviors. However, when the market environment changed, the management chose to turn a blind eyes and find to adjust the stranger in time. And how can we avoid the two occurrence of similar problems? First, send a reliable and flexible cost. Employees should allow for fluid adjustment to the titles based on historical. data. Second, it's necessary to balance the short-term and the long-term incentive mechanism. We should not only look at short-term data, but also incorporate a sustainable development. Third, culture of transport communication should be created. Employers should be able to face two questions and receive when facing unreasonable demand.
So let's move to the area 3, the competency of independent of internal control. The issue is lack of competency in internal control. The first one is the audit community's knowledge gap. The independent investigation community found that the audit community in Toshiba was neither capable nor independent. Specifically, the three external members of the audit committee lacked the knowledge of finance and accounting. This severely compromised their ability to effectively oversee internal audits. Second, internal audits misplaced focus. The corporate audit division responsible for auditing corporate and affiliate companies primarily provided consultation service to management. They rarely conduct service from a accounting audit perspective to assess the appropriateness of accounting treatment. The internal audit's focus was on consultation service rather than assurance service. Let's move into the pervasive lack of independence, which proved equally damaging. The audit committee was comprised at its core an ex-chief financial officer who served during a very tight frame when the accounting irregularities occurred, was the only full-time member of the audit committee. This created a profound conflict of interest, fundamentally undermining the committee's independence. Consequently, this directly led to internal audit's lack of independence from management in such an environment with earning management have the tacit approval of top management. It's unsurprising that accounting audit was excluded from the scope of internal audit. Furthermore, a dominant organization culture played a significant role. The investigation committee observed that a corporate culture existed at Toshiba whereby employees could not act contrary to the intent of their superiors. In such a restrictive culture, an upright internal audit could not survive, particularly, particularly without independence from management. To address these issues, we need a dual approach. First, for enhancing competency, we must strengthen audit community expertise. This means ensuring members, especially external ones, possess strong financial and accounting knowledge through robust selection and training. We also need to prioritize internal audit functions, emphasizing its primary role as a assurance function, not just consulting. This includes mandating regular accounting audits, crucial in high-risk areas. Second, to assure independence, we must establish a truly independent audit committee. This committee must be capable and free from conflicts of interest, meaning excluding former senior management from periods of irregularities. Direct reporting lives are vital. Internal audit must report directly to its independent community to maintain objectivity. Finally, fostering a culture of openness and integrity is key. We must change the corporate culture where employees fear challenging superiors, empowering internal audits to report weakness without reprisal, which is fundamental to preventing future governance failures.
Now let me elaborate corporate governance structure, good corporate governance, and organization culture. Toshiba is one of the early adopters. of the corporate governance reforms initiated in Japan. The corporate governance structure met corporate governance standards. That means Toshiba complied with regulatory requirements. According to the Division of Duties rules of Toshiba, the Corporate Audit Division is in charge of auditing the corporate divisions, the companies, branch companies, and affiliated companies. It shows that in Toshiba, audit department is still valued. However, time and again cases of corporate governance failures have provided evidence that good corporate governance structure doesn't necessarily lead to a good corporate governance. In Toshiba, the corporate audit division mainly provided consultation services for the management being carried out at each of the companies, etc., as part of the business operations audits. And it rarely conducted any services from the perspective of an accounting audit into whether or not an accounting treatment was appropriate. Also, in Toshiba, the top management used to set targets that are unachievable. There was excessive pressure from the top management to achieve those targets. The variable pay is a significant portion of the total pay. The compensation of executive officers comprises a base compensation based on title and a role compensation, which is based on work content. 40% up to 45% of the role compensation is based on performance of the overall company or business department. Challenge to achieve unachievable targets and a performance pay based pay provide enough motivation to manage earnings. Profit manipulation has become an unspoken rule under the leadership of senior management. And the audit committee and internal audit have failed to check the behavior of management. So, how to solve these problems? We can establish a tell the truth culture to encourage employees to raise questions, set up anonymous reporting channels, and avoiding repressive management. Regularly, regularly evaluate effectiveness of corporate governance, strengthen the substance of governance, and avoid it becoming a formality. Now let me elaborate. Internal audit failures leads to corporate governance failure. In the Toshiba case, the main issue in internal audit was that it focused too much on consultation services instead of assurance services. The internal audit team provided advice on operations and business processes, but neglected its core responsibility, which are auditing financial reports and ensuring accounting accuracy. As a result, Toshiba's financial manipulation from 2009 to 2014 went unnoticed, which led to a massive accounting scandal. It's important to know that internal audit can provide consultation, but it should not replace assurance. The problem in Toshiba was not providing consultation itself, but failing to focus on accounting audits, which is critical to maintain transparency and protect stakeholders. Another key issue was that the lack of expertise and independence in the audit committee. Three external members had no financial or accounting background, and the only full time member was a former CFO involved in the irregularities. This created a conflict to interest and weakened oversight. The internal audit team reported to management, not the audit committee, making it impossible to act independently. Toshiba's corporate culture also played a role. Employees were expected to follow management's order without questions. This toxic environment prevented auditors and employees from speaking up about issues. To address these problems, several solutions are necessary. First, we can adjust the reporting lines to ensure internal audit reports to the audit committee rather than management. Second, we can introduce independent directors with financial or auditing qualifications to enhance financial oversight capabilities.